So the reason we look at the economic calendar is for opportunities that we see at the time, and sometimes those opportunities can last for a few days after the event. So for example, this hot CPI print that we got on the 26th of June, we looked at an at market opportunity on the following day, on the Thursday morning. But also we saw an opportunity in early July, on July the 2nd evening, day on the 3rd, flagged up in the cheat sheet on this hot CPI print, and we saw expectations shift for the RBA, and all of a sudden we saw a nice uptick in expectations for interest rate hikes coming on the back of that hotter print, just increasing expectations of an RBA needing to hike interest rates. That was just giving us an opportunity to buy the Aussie dollar, and we saw an opportunity from the day after. You see the Wednesday, the Thursday, we saw a little pullback here flagged in the London webinar, as well as an at-market opportunity looking to take profit at the 1/100. But we were also able to flag an opportunity on the daily chart on the July the 3rd. So we said in the cheat sheet that if we saw a daily close above 10965, you could look for a return to that level and a bounce up to 100. And on the cheat sheet for the end of today, just highlighted if you haven't hit 1.100, you might want to take some profit or move stops to break even. You don't want to let this come back against you. And you can see that that's highlighted in the cheat sheet, just outlining the opportunity. You can see here, this is the cheat sheet from Wednesday, and we're just saying here, look, buy bias from 10965 if and only if the daily close is above 1.0965, and then we gave the expectations that you would typically expect. So that's why we look at the cheat sheet, and you can see even in this opportunity, this was a good sort of 5-6 days after the actual hot CPI print, but still providing opportunities as we look at the Aussie New Zealand dollar, noticing that yield spread ticking higher, noting interest rate expectations ticking higher, all of which was encouraging for a swing trade bias in the Aussie New Zealand dollar and intraday buying opportunities that we've been flagging up as we've been moving along. Okay, let's look at what's ahead for the calendar this week. Now, the first thing to note is the end of the second round of the European elections. That will likely influence the euro to start the week, and we'll be looking at on Monday in the London webinar and unpacking if and what opportunities there are out of that. So that's the first thing to be aware of. Then as we come into Monday's data, it's pretty quiet. There's nothing jumping out. It's a quiet start to the week. Going through Monday, there's nothing that's really worth mentioning there. Tuesday, going into another quiet day. There's nothing there that's jumping out at me as a potential opportunity. However, things do start to become more interesting on Wednesday. We have the RBNZ interest rate decision coming out overnight. Now, it's unlikely that the RBNZ are going to make any alterations to their policy on the 10th of July. Their projections aren't going to come now until the August decision. So the time they're likely to communicate a change will be in August, and at present, they're expecting the first rate cut to come in August 2025. So that's the RBNZ's projections. The short-term interest rate market's outlook is slightly different to that. You can see that they see an interest rate coming sooner than August next year, and with the rate currently at 5.5, short-term interest rate markets, they're seeing the first interest rate cut around November this year. So they see quite a different rate path. So in terms of communication from the RBNZ, we're unlikely to get much communication from them. The statement should be pretty short, pretty brief, and this should just be a placeholder meeting. However, we'll still cover it. It's still worth being an opportunity, particularly if they do start to stress some of the slowing growth that they've been seeing. Business confidence is continuing to track lower, fifth consecutive month falling in terms of business confidence. The inflation rate, the second quarter data, is due to come out before the August meeting, so it's unlikely that the RBNZ do anything on the 10th of July. So expect that to be a placeholder meeting. So obviously, if there is a deviation from that, that will obviously be worth covering and worth keeping an eye on. But that's the major event to be looking at as we go through Wednesday overnight. Then coming through to Wednesday afternoon, there's not a lot going on there. Thursday, we've got the more interesting day with the UK GDP and the US CPI. So these German inflation readings, they're all the final readings, unlikely to move markets. But the GDP is more interesting out of the UK. We are looking for an opportunity to sell the pound. You can see the pound is quite stretched in terms of the CFTC report. We know that market pricing for the pound is anticipating an interest rate cut for August, and those expectations are increasing. The pound at an index level is pretty elevated, and we're waiting for that sort of sequence of cuts to come. We've now had the UK election, Labour government have come in as expected. This should just open the path now for Bank of England interest rate cuts. And the first one is anticipated at the 1st of August meeting now, with short-term interest rate markets pricing it in. So what will be interesting here is if we see a big miss in the GDP print, if we start seeing that coming in well below market's expectation. The prior reading, month on month, was 0% data, 0%. And markets are expecting 0.2. So if that starts to surprise to the downside and we see growth moving lower, then you'd expect a sharp move in the pound. So that should be a good opportunity. Not interested in buying the pound on a strong print because the pound's already quite elevated. You can see it elevated at an index level. You can see it elevated in the CFTC level. In the CROT report, but markets just want to find a reason to sell it, and so we're waiting for a reason for that to take place. We've got a whole catalogue of data coming out at the same time, so we would want to see a general on consensus miss to give us an opportunity in the pound, but pound selling would definitely be a good opportunity if we got that on Wednesday. Then we have this US CPI print. We all know how important, if you've been following us for a while, we all know how important US inflation data is. And if we see 3.3% was the last print for May, and if we see another tick lower, it just keeps open the path for US interest rate cuts. Surprise move higher, we could see a bit of dollar buying coming in, but really we're looking for another consecutive drop is what we'll be looking for. And if we see another consecutive drop, look for dollar weakness, and that could be a good opportunity maybe to go long the euro dollar, depending on the elections results at the start of the week for Monday. This video is recorded before the results of the French election is known, so we'll be unpicking that as we go through the Monday webinar. Friday, not a whole lot coming in. You've got this French CPI data, but again, it's the component of the European data, and it is weaker. Not weaker, it is the final print rather, so unlikely to move markets much. PPI print coming up, that could also potentially move markets if you see that, sharply moving lower. That could give us a little bit more dollar weakness. And then the University of Michigan preliminary reading. You get two of these University of Michigan data releases a month. The first one, the preliminary one, is the most influential one, and that's due to come in slightly higher at 68.2. But keep an eye on the inflation expectations, because the final readings for June, the inflation expectations surprised markets to the downside, and in theory they should have helped with some dollar weakness. Now there were other drivers going on. It was also month end, quarter end, half yearly end, and we saw quite a few dollar bids coming in on top of President Biden's sort of debate didn't go very well with Donald Trump, and the bond market feared inflationary policies from Trump if he got a second term in office. That all supported the dollar. But what I'm interested in here is, do we see University of Michigan inflation expectations drop even further? Right? You can see that 3% for the 1 year, 3% for the 5 year. If we start to see that ticking lower as well, that's another little tick in the deflationary box. So it's a funny week. The US CPI print is the most important data point of the week. and the UK GDP could be a strong mover in the pound. So they're the two things to be looking out for the weekend. Don't forget, we'll be covering live risk events like US CPI in real time, breaking down the data. And also the other thing to be looking at, we'll be looking at the euro pound now. You know, there is a potential for euro pound upside. Been wanting to keep out of both of the currencies with the UK election and French elections going on at the same time. Been messing around the euro pound, but it wouldn't be unreasonable to start to put euro pound upside potentially creeping back in. So we'll be looking for a swing trading opportunity in the euro pound. You can see here technically we've got a Harami inside bar pattern forming, sort of minor break of Harami inside bar, pullback, a little bit of support. So technically market's trying to find a little support just above this sort of big support level, coming in around that 8400 region. That's finding support for now. And we'll just be keeping an eye on this to see if there's a clear way of getting into the market. There's you can see this potential break of a trend line, which is holding for now. And any deep dips down to this 8420, 430 region does look suitable for buying. So any dips lower, might be looking for opportunities depending on the result of the French election and depending on what's going on with UK GDP as well. So that will be pretty important going forward. We've also got a couple of important speeches coming out next week as well. We hear from Powell a couple of times, and we'll be covering the events. And don't forget to come along to the London and the New York webinars if you've got any particular questions, and we can go through things in detail. We've also been looking at quite a lot of trap buying and selling in the futures market in the webinars, which have been proving very, very helpful as great turning points in the mini pound dollar, euro dollar, oil markets, etc., etc. Okay, folks, take care and look forward to seeing you in the week. Cheers now. Bye.